Hello and welcome to the big picture. The Indian economy is suddenly looking better than anyone expected. In fact, it is now being touted as on par with China and is even expected to overtake it sooner than one thought it would. Or at least that's what the new GDP numbers based on a revised methodology is saying. What was thought as just a 4.7% growth in 2014, now we are told was actually 6.9%, and in the third quarter ending last December, it was supposed to have grown at 7.5%. Very heartening figures indeed. Except that not all economists or analysts are convinced. They point out that these numbers just don't match the reality on the ground, be it in terms of industrial production, consumer demand, manufacturing growth, or even agricultural growth. So why this mismatch between the numbers and the reality on the ground? We will discuss today the new methodology in calculating the GDP and whether it would be able to match the economic parameters in the future and the impact of this mismatch. To discuss this, I have an eminent panel of guests. Arvind Virmani, head chintanlive.org and former chief economic advisor in the Finance Ministry, Government of India. Ajay, Shankar will be joining us soon. Professor N.R. Bhanumurthy, member, National Institute of Public Finance and Policy, and S.P. Sharma, chief economist, PhD, Chamber of Commerce and Industry. Welcome to all of you. Mr. Virmani, do you agree this mismatch which people are now talking about is something to be concerned about?
Absolutely. What I'm surprised is actually the reaction of the statistical authorities, two of them, the chairman of the commission and the secretary, that they can't produce back series. You know, if you really want to look at trends in growth, etc., you have to have the back series, and that also tells us something more about why this number has changed so dramatically. Clearly, we are not able to explain. I mean, to myself, being an analyst, I need to have a feeling for these numbers, and I just do not at the present understand exactly why this growth rate has jumped by more than 2%. Right. Which is kind of unprecedented. That's the problem. I mean, there's always a change, there's always an increase, but the amount is just difficult to explain.
No, periodically this change in methodology or revising the year of this thing has taken place always.
That's right.
But it has never resulted in this kind of a dramatic change.
That's right. As far as to my memory, there hasn't. But on the other side, I should say a couple of things. And that is, you know, I recall from earlier days, there was this problem about using IIP versus ASI. I vaguely remember at some point NSO saying that they've stopped using the ASI numbers, the annual survey, which was more comprehensive. Now, again, I mean, this should be explained. I don't know whether that's true, but it could be because, as you mentioned, the IIP numbers don't support it. But we have to remember, the IIP is based on the organized sector, basically. And the ASI used to capture a larger segment of the smaller proportion, not everything, but the smaller proportion. So there are issues like that, and we just do not have a satisfactory answer of where is this more information, what kind of information it is. So I'm not saying the numbers are wrong, but we do not have adequate basis to accept their own statements to be able to confirm it. Two more points before we go into other things. So one aspect of this is a slightly faster growth in investment. Now, again, as I said, maybe the data we have is relating to large industry. If they have some better data in investment in small industry, they should give it to us. I mean, they should put it on public domain so we can judge how this has gone up to 3.1% and 4%. Similarly, the consumption growth seems slightly faster. So, basic point being, without them giving us more information, more explanation, this doubt will remain. Why the growth rate is so much higher?
Well, are you equally concerned, or you think that? No, I read one of your articles which you have written.
No, I think the concerns are very valid, particularly in the absence of full information that has gone behind in revising these GDP numbers. But having said that, these revisions are very common.
Nobody is questioning the revisions in any case.
Yeah, and the difference between the previous revisions and the current revision is that at the moment, in the new base, we are looking at a completely different animal altogether. That is called GDP at market price, which will become a representative output or GDP for an economy compared to what we used to see that GDP at factor cost.
No, but again, I have not heard anybody having any serious serious differences on that, on the new methodology.
Yes.
It is supposed to be a more internationally recognized.
But if you are believing the past numbers, the past methodology, I don't see any reason why we should not believe in these numbers, because this is largely coming from the system of national accounts, which is a well-established international practice, and we have been criticized in the past that we are not following that methodology. So we are following that methodology.
Now we have started following it.
But largely because we are having a much better databases at the moment, much broader databases than...
We are having, you're saying?
Yeah, than ASI. I think they are using MCA 21 data, which is a broader corporate sector data that includes more than ASI units. So in that sense, we are having a very, very new data sets that helps in estimating GDP. But other very relevant point, as Dr. Virmani pointed out, is the concern about predictability of these numbers.
Exactly.
We really don't have the back series. As a person like me who are working on forecasting GDP numbers, I would have problems in really using this current base until unless we don't get the back series. We will be facing difficulty in predicting for the next year.
Back series, both of you have been talking about back series. The CSSO is saying that, are they saying that we will not be able to provide back series, or are they saying that we'll need time to get this?
No, the interview which I read said that it is, we don't have the data, so we can't do back series. But that's I'm sorry to say, a lame excuse, because you never have, whenever you revise and add new data, you never have the back data, but you do as much as you can. Right? I mean, the simplest thing which we'll all be forced to do, including myself, is just apply the new weights.
No, exactly. That's what I'm trying to, clarification I'm trying to see. When you're seeking the back series data, the back series data will have to be calculated on the basis of the new formula, right?
Well,
the new methodology.
Most element thing is the weights. Yes. The weights are there now, the new weights. Those can be applied backwards in any case. That's the simplest thing to do. But you use whatever other additional data which you have going backwards. The data...
How far backwards would you think you will need?
Well, that depends on the use. If the point is trends in growth rate, as Bhanu said also, you need to have at least 10 years of data.
Absolutely. 10 years of data. Dr. Sharma, Dr. Sharma, you are an economist, but, working for a Chamber of Commerce and Industry, these new figures which are coming out, these new... growth rates and things like that, matching with China, and we're going to go ahead of China. How much is the industry excited by these numbers?
Sir, actually, a lot of activity is unaccounted in the economy, because we are dealing with the industry and from various grassroots levels. So this IIP's number is not reflecting the actual picture of industry, let me tell you, because we have so many surveys of the industry at the grassroots level. MSME sector, that is growing at the rate of 20-30%. That is totally unaccounted in the IIP numbers. The weight is, I think, less than 25%. My other colleagues will also agree with me. And simultaneously, I am agreeing with the Bhanumurthy and Professor Virmani that there should be some back series also for the recent numbers. These numbers are very lucrative and are comparable with the international standards, and that will be useful going forward for the various policy makers to formulate the policy going in the coming times. But the problem is on the basis of these numbers, nobody can predict the growth rate of economy in the coming times. So that should be provided from the back series, like from 2001.
No, that's okay.
But let me answer your China question if you want to do that.
Yeah, I'll come to you. But I want you to, how does the industry take these numbers?
These numbers
do you think that these numbers will spur investment, will spur them to, make...
Yes, sir. Very, very lucrative for the industry members, and they are very optimistic. Yes, they have accepted these numbers, and they are very happy with these numbers, because earlier a lot of activities unaccounted that I earlier mentioned, because they were not happy with the growth of the economy, though they are growing.
So this changing from factor cost to market prices is something which is
also welcome. Okay. That should be at the international standards.
Obviously.
Yes.
Okay.
So you asked a question about comparison with China.
And well, it turns out next year we will overtake that.
Yeah, so there are two parts to the question. One part is which actually that conclusion is not justified, which is to the past. up to this particular point. Why? Because the nominal numbers have not changed. The exchange rate is still the same because that has nothing to do with the GDP data. These two plus the structure of prices. The structure of prices can make some difference. You know, at some point they'll make the GDP at purchasing power parity calculation, the World Bank and IMF. I doubt that's going to change a great deal. Maybe 1 or 2% higher in terms of per capita GDP and GDP at PPP. So in the past, I don't think there's going to be a big revision. Now, of course, going forward, based on these assume that these growth numbers will be much higher, which, as I said, we don't know because we don't know the trends yet. But if they are, then yes, in future, probably the gap between China and India will narrow a little faster.
According to figures today, it's already reached on par, and then the next year we will go ahead.
I think it's the growth rates.
The growth rate.
Yeah, that's another confusion. I must say,
we are already faster than China.
Many of your viewers, they must be very careful to distinguishing between the rate of growth, which may be faster than China, but the level of the GDP, the real GDP or per capita GDP is not. That's going to take ages.
No, but it's very convenient to post these things so that, we look better than them. We are now joined in by Ajay Shankar, former secretary in the DIPP in the Ministry of Commerce and Industry, Government of India. Welcome, Mr. Ajay Shankar. Mr. Ajay Shankar, when you look at these figures, you have headed this you are secretary of the National Manufacturing Competitiveness Council also. When you look at these revised figures, does it excite you? Do you think that this will lead to further growth in the economy, immediate growth? Do you think the industry, the investors, both domestic and foreign investors, will get excited by these numbers?
I think they would have got excited, but for the skepticism that has surrounded the announcement of these numbers. Because it's very important to have credibility about our numbers. Now, it is true that when you change the base year or you change the methodology, in absolute terms, the GDP will become higher, the share of industry will be higher, industrial output would be higher. So on that, most observers who are not experts would not have a problem. But the real problem arises is that if your cement, steel, auto production is more or less flat, and then you are getting numbers which saying industry's growth rates are very high, then there is obviously a problem. And even if we assume that the new data captures the SME sector, but it is very unlikely if the organized sector is growing very slowly or is flat, that the SME sector in manufacturing would be growing very fast. So I think the government and those in authority need to become far more transparent and open about the data on which basis of which they have generated these numbers. Because I think there is very often a problem not in the methodology, but in the integrity of data entry. And that, I think, the authorities are very reluctant to share with the public. So I'll give you one personal example. When I was secretary DIPP, the DG CPWD wanted to meet me, and he said the work for the Commonwealth Games will come to a standstill if I didn't intervene. And the problem was this, that the contracts linked the wholesale price index on steel to the payment. And for some reason, steel prices had been growing at 20% per year, and the wholesale price index had shown that steel prices had not grown at all for 3 years. And when we looked into it, we found that there was a serious error, bona fide error. So I think we need a system of concurrent external audit of data entry more than on methodology. If we did that, I think credibility would be much higher. But I think the statistical organization has tended to increasingly become less transparent about their data than becoming more transparent.
Okay. But that question which I asked you about, when you said that these numbers have to be, there has to be integrity of numbers. But when you look at these numbers and in your own experience, in your previous assignment as the member secretary of National Manufacturing Competitiveness Council, do you see these numbers actually being a reality on the ground? Some of these, numbers as far as the manufacturing sector is concerned, or SME.
Manufacturing sector, the growth rate numbers obviously have a problem of credibility.
You have, okay.
And I would add that if I'm looking at investment, I would look at the demand numbers in my segment. And in all the key segments, demand is yet to pick up.
Exactly. That is,
I think Ajay has
demand is yet to pick up.
Ajay has put his finger on exactly. We often used to discuss these things before in government. Really, I recall one mistake in GDP where some data entry fellow had shifted the decimal. So I mean, it seems a trivial thing, but I think it's worth them going back.
4.76 became 47.6.
And on some small item, but then that magnified to, even if it changes by 0.5 percentage point, ultimately it makes a big difference. Anyway, so I think it's important for them. I don't think it's adequate. I'm sorry to say it, they are old friends of mine, both those people who talk, but I really urge them to go and look very carefully at the numbers. Not, as he said, very rightly, Shankar said, Ajay said, that it's not, we are not questioning the methodology. I mean, they're all pretty bright and intelligent people. I'm sure they've done a reasonable job.
They're following an international methodology.
Yeah. So, but we are questioning whether, and they can easily ease that. For example, they say they've used the database of the company affairs. One would like to see the growth rates in that company affairs data, for example. What's happening to investment there, that's easy. That is just a matter of transparency or putting it out in domain, so we will feel reassured.
Okay.
There is a serious problem because if you look at excise collections, they are not rising.
That's exactly the point. I was looking one of them. No, not just excise. There are also services. What they're supposed to, receipts on services, which was supposed, the budget estimate is some 26%, and right now it's just 6.7%. So, will they be able to make up and things like that?
Well, again, we need not worry that about current year. That will get sorted out. That'll get revised. That is always there. But it is that last year's number, which
last
was...
year's number from 4.7 to 6, 4.5 to 6.9.
Yeah,
but
2 something.
Completely different, uncomparable numbers. We really, from this press release, we will not be able to estimate what is the GDP at factor cost.
No, I'm sorry, I don't quite agree. The GVA which is there is the equivalent of the GDP at factor cost.
Sir, GVA at basic price.
More or less, roughly.
No. GVA at basic price is available. But GVA at factor cost, we cannot be able to estimate from this number that is presented here.
Bhanumurthy, let's not get too technical on this. I'm sure most of my viewers will not understand.
Just a point.
No, but I have a bigger, larger question which I want all of you to address. The budget is supposed to be presented in the next couple of weeks. How will it affect the budget making exercise? You have done this several years. Now, if you are in the position of if you are the chief economic advisor sitting there in the North Block trying to, finalize the budget.
So, it's kind of what I hinted at earlier. Actually, for them, it's less of a problem because the nominal GDP has not changed. So, they can just assume some nominal GDP growth number because that's what all that matters for the ratios, which is very important. I mean, people will always question them, what do you think is the growth rate? But then they can plead equal ignorance like we are doing here. But on the nominal, which is critical, because that depends, the fiscal deficit ratios, the revenue deficit.
It will affect everything.
No, that will not be so difficult. That will be easier.
On the basis of nominal numbers. Yeah. Current account deficit or fiscal deficit, all these ratios are calculated on the basis of nominal numbers. And nominal GDP is almost same as predicted earlier.
See, they only need one number for budget calculation, that is the nominal GDP for the next year. So if you have that one, all your revenue projections, everything is based on that.
But you think that even that is difficult?
Well, even in the past it was difficult. So
no, it's not.
Projecting the number is difficult.
No more difficult than earlier.
Yes.
It's not become more difficult. The division will be more difficult about real growth rate and the inflation component.
No, but it's very interesting. As a complete layman, I was a student of economics in undergraduation. So, but as a layman, Mr. Ajay Shankar, when the finance minister presents his budget and comes out with all kinds of figures and things like that, will that also be suspected?
I think it would be unwise to take great comfort from the higher growth rates that the new numbers have generated. Because the fact of the matter is that for investors and market players, demand is still sluggish. And therefore, I think it would be prudent to assume that these numbers have to be treated with some measure of skepticism. And the budget exercise should be undertaken on the premise that we need to increase the growth rate and look at measures which would stimulate growth.
So he's talking about a different thing. There's, the elasticities for projection because they are based mostly on nominal values, that is not a serious problem. What he's saying is a slightly different point, which is that earlier we were thinking we need to do much more. If the growth rate was still 5.7 or 5.5, one would have, there would have been pressure.
It was 4.7 or 4.9?
Well, it was projected to be around 5.5, 7 by me, but on your show here. But so what he's saying is that just because the number is now 7.4 or something like that, we should not think that nothing more needs to be done. But I think what it does do is take the pressure off so that the government can now think in a more medium-term sense rather than immediate.
You're saying that it will take the pressure off.
Yeah.
But does it really take the pressure off?
No, the pressure depends on what. If you want to get elected in 2019, you still have to get the growth rate up there and keep it there. No? So that pressure is still there.
So this for as
but
far as
there's nothing to panic, so to say.
Would you agree with that? There's nothing to panic, and it will affect, politically it can be beneficial to them to show that, these are the figures which are coming up. No. But are there any, roadblocks or any traps there?
No.
Make those kind of claims?
No, there's completely different question altogether. I think if you're...
No, there's a political question.
No.
It's a political question.
I think even if it is 8% or 9%, if it doesn't percolate to increasing employment opportunities, then they'll still have a problem. I think the high growth should lead to...
We will get to know this only after a year or so.
Yes, the high growth should lead to more employment opportunities. Otherwise, I don't think it is going to be more popular among the people.
Mr. Sharma, more growth opportunities, more investments. Do you see more investments having happened in the last, say, a year or so?
Yes.
In any sector?
We have observed some optimism amongst the corporate.
Optimism, but yes. It is not really...
Not really undertaking, but they are still optimistic that the economy will improve in the coming times. Major thing is the ease of doing business. They are not happy with the ease of doing business at the current level because they face many problems while investing, while doing business. So, and some problems like land acquisition and labor laws. These are common things for all the businesses, whether it is the pharmaceutical sector or textile sector.
So this number really doesn't...
yes.
Excite them to...
GDP at 6% or 7% or even 8% doesn't matter. That matters is only the ease of doing business, whether they are able to invest in the economy or not.
So the future demand that matters for them.
Future demand which matters for them, and for them it doesn't... I mean, when I'm going through many of the reports, they say there is no demand in many sectors, but still it's showing this kind of numbers.
Good numbers improved sentiment also, but not investments in real terms. If there is real ease of doing business, then they are ready to invest in the economy.
Mr. Ajay Shankar, is that what you also witnessed and, when you're meeting these people?
I think investors are waiting for increase in demand. And the expectation from government is that it should be able to take measures which stimulate demand. Now, that is not easy, but that is the expectation, and I do hope that the higher growth numbers do not lead to some measure of complacency in government in confronting some very difficult choices.
But you should remember that, when we are talking about stock markets, most of the people who advertise in all TV channels, these are all big companies. Normally, there may be a few smaller ones. So that is still, the IIP is the best measure of that. So you are not going to get, that's not there. We know that. Now we know the capital goods production in the IIP is still quite pathetic and so on. So I'm sure the finance ministry is also aware of that even if there is something going on in the small scale sector or somewhere else.
No, small scale
sector. He quite rightly, I think Professor Bhanu rightly said,
small scale sector,
it has to... some jobs have to be generated there, but we don't have that data right now. We don't have the job data.
SMEs are saying that they are not getting orders. It's not that there's been any dramatic change in their thing. Bhanumurthy, another thing which I want before we final round. How will the RBI governor react? Because there has been very interesting discussions that now there was this huge pressure on the RBI governor to lower the interest rate. He did, about a month back. They were expecting another one on February. He didn't do it. So now, why should he do it when the growth numbers are so good? That is also a question being asked.
No, I think that's what. This is right now the number that we have is, as I said, it's a completely different indicator. So my guess is that the RBI may go back to the statistical office and estimate the GDP at factor cost based on the previous methodology. I think they are going to come out, I think the CSO is going to come out with a detailed methodology by this month end. So we'll see how they are estimating and what kind of comparable numbers that can be generated.
RBI will be doing this, or
the CSO is going to come out,
will.
and I think RBI is going to work with the CSO. Otherwise, it's very difficult to make policy in this kind of situation. Whether the growth, if you look at the IIP numbers, again, that's completely different source, isn't it? So IIP numbers are showing a different trend, while your quarterly numbers are giving a different trend because you are following different data sources.
Right.
So given this kind of situation, making a credit policy is going to be very difficult. And I guess the central bank will have to work a little more than CSO to estimate some kind of comparable GDP numbers and IIP numbers before they go for any kind of action.
Virmani?
So the key number, of course, for the central bank is the inflation, which we do have the CPI.
Yes.
And that clearly shows that the non-core inflation the core inflation is roughly 5.5 or a little lower. And actually falling, the new unfortunately, the CPI has also done a rebase, which I was just looking at before I came here. So everything has changed, which makes certainly life more difficult. So as I'm not in my quiet period, I can give you a little bit of on the RBI. What that means is they will be much more inclined to just wait and see.
That's right.
Because once there's uncertainty and you're not sure about so many things having changed, the best practice is generally to stay where you are rather than...
In any case, the interest rate cuts are also not helping much in terms of credit offtake.
Mr. Ajay Shankar, very quickly, last words to you. How difficult will the whole budget making exercise will be because of all this?
Now, the challenge for the budget remains of how to stimulate demand without being fiscally irresponsible. Because the Governor RBI has made it very clear that till the credibility and fiscal consolidation is there, he will find it difficult to lower interest rates. So the challenge is how to stimulate demand and be fiscally responsible.
Okay, sir.
And that's a tough one.
I think on that note, we need to end. I don't think I can add anything more to what all these experts sitting here have said. It will be interesting to watch what kind of numbers we will see in the budget just 2 weeks away. Thanks to all my guests, Ajay Shankar, Arvind Virmani, Bhanumurthy and SP Sharma. Please keep watching. We'll come back with another issue, The Big Picture, same time on Monday. Meanwhile, have a great weekend.